Money live at the Prolific Growth Summit. That's in Indianapolis. He appears at 2 p.m. Eastern right here on Fox Business, only on Fox Business. That's it for Varney and Company. I'm going to hand it over right now to the Hot Money crew. Here you go. What do you got?
It's a hot one indeed, Stu. We'll take it from here. Thank you, sir. Fed Chair Powell says the risks are tilting in the wrong direction for inflation and jobs. Could the bull market in stocks be in jeopardy? Welcome to the Big Money Show. I'm Brian Brenberg, along with my co-hosts Thomas Hayes, Dagan McDowell, Jackie DeAngelis, and with us for the hour, Fox Business senior correspondent Charlie Gasparino. Welcome, one and all. Well, with unemployment edging up and inflation stuck above the Fed's 2% target, Jay Powell sees risks everywhere.
Near-term risks to inflation are tilted to the upside, and risks to employment are tilted to the downside, a challenging situation. Two-sided risks mean that there is no risk-free path.
Equity prices are fairly highly valued.
But equity markets aren't hesitating. Stocks have jumped since the Fed's decision to cut rates, and traders still see more cuts before year's end. So, is Powell's patience an excuse for being too late, or is this economy really caught in the jaws of rising inflation and a weakening job market? Thomas Hayes, I'll come to you first on this one. Jay Powell didn't have very positive words to say about your bull market. What do you think about that?
Yeah, it reminds me of Alan Greenspan, Irrational Exuberance in 1996. He was right, markets were overvalued, but he was 4 years early. I think the two-sided risk that Powell addresses here, the weight is now shifted to employment. And employment is like a frog in a pot. You can stay restrictive so long, but the minute you start to see the layoffs, that can happen very, very quickly. So we may see a situation where too late Powell becomes just in time Powell, provided we get 4 to 5 cuts over the next 12 months. And historically, if that is the case, the statistics say in an expansion, you're going to be up 16.1% in the S&P 500 in the next 12 months, assuming we get 4 cuts into expansion.
So you think he can kind of resuscitate his credibility by becoming right on time Powell? You think he set himself up well for that?
I think he might get lucky. I think he was irresponsible being this restrictive for this long. He's destroyed the housing market. That's starting to come back now that rates are coming down. We've seen mortgage rates come down. But you've got $35 trillion of wealth trapped in people's home equity that they can't access. The minute rates continue to come down and people can access that, this economy is going to boom.
Dagan, he had something to say about tariffs and prices as well. Take a listen to this.
We've been watching this since the beginning. Half our mandate is inflation, and I would say that the pass-through to consumers has been later and less than we expected. How much of that will continue, I don't know, but the responsible thing from our standpoint was to watch and wait because, you know, it's our job to make sure we don't make a mistake on inflation.
Now, you wouldn't want to make a mistake on inflation, Dagan, if you're Jerome Powell. You wouldn't want to do that. You wouldn't want to sully your reputation by doing that.
Yeah, because 9% inflation wasn't a mistake.
Right, no, you wouldn't want that to happen.
But you mentioned the irrational exuberance speech. It wasn't 4 years, it was 3, just by the way.
You were close.
Yeah, it was December of 96. Bubble burst in March of 2000. Yeah, having lived through it. That comment that Powell made about the valuation of stocks here, equity prices are fairly high valued, is his tell that there is a wild asset bubble. And because of that, there are limitations to how low the Federal Reserve can lower interest rates relative to inflation because of the bananas, crazy nuttiness in asset speculation. Startups, stocks, real estate,
housing,
crypto, housing. People can't, you know how people can capture their home equity? You can sell your house.
Yes.
That's how you can do it. But I just want to finish this, Charlie, before you jump in. So lending's not tight, capital raising is just fine. And the problem is, if you lowered interest rates to, say, closer to inflation, you're going to ignite even more of a bubble, even more speculation in all of these asset classes. So where does that leave the Federal Reserve? It explodes, and then the Fed, like in in 08 has to step in and clean it all up.
Well said. And I will take issue with you, Tom. He did not destroy the housing market. I mean, let's be real clear. If he lowers interest rates, housing prices are astronomically high. If he lowers interest rates, you're going to make them higher because people are going to borrow.
Yeah, no, I think this time you're going to be wrong on that, Charlie. And the reason
are you saying that housing prices aren't like at record highs and people can't buy?
They are at record highs. I think what you're going to see this time, Charlie, is that when rates come down, you're going to see an amount of supply come on the market. To Dagan's point about people getting their equity by selling their house, there are people that are waiting and waiting because they don't want to trade out of a 3% mortgage for a 7% mortgage.
So you think prices are going to go down?
I think you're going to see so much supply hit the market all at once that there's going to be pressure, or at least these high prices are going to consolidate for several years.
I can't remember where that has ever happened because not only the supply you're talking about is not new housing. We're not building a lot of new housing, particularly in the Northeast. But, you know, I look at places like South Carolina. Trust me.
Do you know why? Because builders cannot take that risk until they know what.
I know, but there's not enough supply.
Yeah.
I'm just telling you.
It's coming. Trump is going to open 500,000 acres in federal land.
Federal land is going to bail out, is going to send housing prices down.
It's going to create supply.
I don't believe it. It never has happened like that.
Charlie, this reminds me
that is historical anomaly.
Charlie, this reminds me of a year ago when everyone was telling me China is uninvestable. Don't dare invest in Alibaba stock at $60. Now it's $175 today. It's one of the top stocks in the market today.
Wait until the Senate.
This is what's going to happen.
Wait until the Senate pushes a bill that delists all your Chinese stocks.
Okay.
The rumblings are there. I will say one thing about Jerome Powell, and this is why it reminds me of Floyd Norris. You guys,
I remember Floyd.
Floyd Norris is an old-time columnist for the New York Times. He was actually a very good journalist, but he had one quirk where he was for years before the bubble burst in March 2000, the NASDAQ tech bubble, which took all the markets down. I covered it myself. For years before that, he was predicting the market was overvalued, it was going to blow up, and then finally he was right. And so what scares me about Powell is like he's been so astronomically wrong about like so much inflation, transitory inflation, cut rates when during the election last year where he shouldn't have. And is this the one time
you're talking about a stop clock situation
where the broken
right
clock is right where we are setting the stage for what Dagan said, an asset bubble? If he cuts rates, there's a latent at least emergence of some inflationary pressures. We see we're well above the target. The economy is kind of slowy. I don't know. It's not sputtering, but there's all these sort of things in there where I don't know. I'm just worried that this dude for a change is right.
Well, he's worried. You're worried. Everyone's worried, I guess. I like the term bananas crazy nuttiness, Jackie. Reminds me of a breakfast cereal. Like, I would like that cereal.
Not good for you. It's not good for you.
It depends on the sugar
I
content.
speak that way when I haven't eaten breakfast because I'm searching for the adjective.
It's a good breakfast. I don't know. Do you see that? Do you feel bananas crazy nuttiness out there? Do you feel like maybe AI is justifying some of this, or take it the Powell direction? Are we going to get the stop clock where he's going to just have stopped at the right time and he's going to ease into this? And Tom is right, and he looks like a genius after all.
I'm not sure. But
since we're doing wild projections,
I will say this. For the last 2 years, as equity prices have been moving higher more than 20% each year, and now this year we're seeing a strong stock market as well. I just keep looking at some of these companies and saying to myself, it's difficult to want to buy at the top. It's difficult to imagine, cyclically speaking, that this market is just going to keep going higher. But to your point, Tom, we've defied gravity, and it does keep moving higher. Part of that, I think, is because of a point that Charles has made earlier on this program, which is that there's a certain amount of capital that just keeps getting invested in stocks, but also that we live in an environment where things are so expensive. Even a regular person is using Robinhood to trade because to keep up with inflation, and I'm not talking about the 2.9% number, but I'm talking about the real number of high prices that never came down that people experience in their day-to-day lives. They feel they've got to invest in this market to be able to try to, find a return that will help them cope with the situation that we're dealing with. So with respect to him, I mean, when he stands there and he says, well, the inflation risk is to the upside, yes, we know that. The employment risk is to the downside, Yes, we know that. I feel like once again he's sort of creating, using the data points to create the narrative that he wants to create in this current environment, which is, I will cut rates, but I'm going to do it very slowly. And to the point that you brought up about the dot-com bubble, it was that, you know, there was irrational exuberance in the market, but for 3 years, stocks just went up. And if you sat on the sidelines because you were like me and you're saying, it can't be, it can't be, it can't be, then you lose out by not doing that too.
Yeah. Powell's, his assessment of the risks is very convenient for a guy trying to shed the too late moniker. Like, well, there's a reason I'm going slowly. But Tom, you know, this lag between when we're out of control and when the market sort of blows up, if that's the case that we're in, you got a lot of money sitting on the sidelines in money markets, right, and CDs, and as rates come down, that's everybody always talks about that avalanche of cash coming into markets. Is that kind of what we have to reckon with or be prepared for in the coming months? I don't know, years.
Forced on the risk curve. I will say, when Powell talks about the indices, 40% is the Mag 7. Mag 7 is trading at 33 times earnings. Their earnings growth has decelerated to 10 to 15% we're going to see this quarter. So their multiples stayed high while the earnings growth has compressed. If you look under the surface, small caps, 35% earnings growth next year, trading at around 16 to 17 times earnings. Okay. Unmagnificent 493, all the real businesses, all the Main Street businesses are still undervalued. There's a lot to do under the surface. So we could see a situation where the indices, i.e. S&P is basically a Mag 7 index right now, consolidate sideways, and so much money is made under the surface for all these laggards. The number one thing with small caps is refinancing risk. Rates come down, they refinance, small caps go up. They're breaking out to 4
How do they get impacted by tariffs, though?
We will.
It's on a company-by-company basis, and now it's baked into the price.
We will continue to debate whether this is bananas, crazy nuttiness, or just cornflakes. We'll find out as time passes. Meantime, we're getting new updates on the Texas ICE facility shooting. Fox News correspondent Griff Jenkins joins us now with the latest. Griff.
Hey, Brian. So we got that press conference from Dallas, and the shooter was not identified. A specific motive wasn't given, but I want to show you what I think the biggest takeaway was, and that is shell casings found near the gunman showing anti-ice. You can see it on your screen, literally written on that shell casing. Now, other details we know, the FBI director of that Dallas field office said it was an act of targeted violence. Around 6:40 a.m., detainees, 3 of them, were inside a van that pulled into the Sally Port, or the garage, where detainees are brought to be processed. 3 were shot. At least 1 is deceased. Now, the gunman who fired from an adjacent building is dead as well from a self-inflicted gunshot wound. We also learned, Brian, that no law enforcement officers were injured in this at all. Now, this comes, and to put into context, Brian, exactly almost 1 month ago on August 26th, this very Dallas facility was targeted by an individual who walked up, said he had a bomb on him and a detonator in his hand. Fortunately, that was not an actual bomb, but he was arrested for making terroristic threats. Same facility there. That's why you had Senator Ted Cruz showing up to this press conference as well, saying that the rhetoric is what he blames for this latest attack. Listen here.
This is the 3rd shooting in Texas directed at ICE or CBP. This must stop. To every politician who is using rhetoric demonizing ICE and demonizing CBP, stop. This has very real consequences.
So just to add to that, he said it's the 3rd time in Texas that ICE has been targeted. If you remember back in July in Alvarado, Texas, the Prairieland ICE facility, 10 suspected individuals in tactical gear with weapons attacked that facility. And then over in McAllen, Texas, you had a Border Patrol annex where someone came in firing indiscriminately and hurt a police officer. So Texas has seen quite a lot of this. Finally, Brian, I'll leave you with this as we wait to get more information about this case out in Chicago, where I recently was riding along with ICE during Operation Midway Blitz. That ICE facility there in Chicago has a heightened force protection because they need that more secure because they're getting pretty violent protests out there. It's coast to coast. You're going to hear a lot more about that. Brian?
All right, Griff, a lot of important details there. Thanks very much for that. Coming up, A major victory for free speech. One tech juggernaut now admitting it banned thousands of users over political speech under direction from the Biden administration. We've got the bombshell details next.
When you can't watch, listen. Get the latest news, business, and news headlines on SiriusXM. Anytime, anywhere. Fox News Audio on SiriusXM. America is listening.
So what are you thinking?
I'm thinking about our honeymoon. What about Africa, safari, swim with elephants?
Direct, redefining insurance.
The Biden administration pressured all these platforms to censor. They, in fact, did it. You felt it firsthand. We suspected Google was no different than Twitter and Facebook. And, of course, we were right. They admitted that this was going on. They've pledged to reinstate anyone who's kicked off. This is a big win for the First Amendment today and a big win for people's liberty.
This is what Democrats mocked. This is proof of what conservatives knew, not suspected, but knew all along. Under pressure from Joe Biden and the liberals in the White House, Google, along with other horsemen of the apocalypse, known as major tech companies, censored lawful political and scientific speech on YouTube. After years of grilling from Chairman Jim Jordan, Google finally fessing up. The Biden administration leaned on the company to pull content that did not even violate YouTube's own rules. Elections, COVID, you name it, they obeyed. In a statement, the company calling Biden's pressure unacceptable and wrong. Now they say it and are promising to let thousands of banned creators back on the platform. This it happened the same day that Jimmy Kimmel was back on the air. And now he's acting as if he's some martyr for free speech. Exactly, Charlie Gasparino. But this direct violation of the First Amendment by the Biden administration, which the Supreme Court refused to take up, Missouri v. Biden, this actually, because it was scientific discussion of COVID, it actually cost people their lives.
And legally, it's more sort of out there in terms of a legal mandate. Let's be real clear. Brendan Carr is the FCC chair. The FCC has, since 1934, something over public airways, not cable. Leave cable aside. Leave the internet aside. Leave Google. It has something known as the public interest rule, which says, essentially, you got to kind of be fair. If you're going to have the View, well, you better have the anti-View. I mean, something like that. If you're going to have a comedian like Jimmy Kimmel, literally, issuing left-wing agitprop every day about, Trump hating, you got to have someone like Gutfeld, showing up, doing the same thing on the other side. So there needs to be some semblance of fairness. By the way, broadcast networks generally follow that for many years. They haven't in the last 10. And all Brendan Carr is saying on this is get the other side. There is a law here. It says it right here. And by the way, if you look at all these broadcast networks, they skew so far left. Now, why does this make it worse? Because Brendan's power and the power of government, and from a regulatory standpoint, extends over public airways. Yeah. Like ABC, put a little antenna on your house and you get it for free, right? It doesn't extend to the internet. They are making law here. This is where this gets really nasty. And I'll tell you, it's actually more grossly a violation of the First Amendment because, let's face it, people don't care too much about these public airways anymore. Everything, free speech, reigns on social media, on YouTube. And for them to be encroaching upon that is pretty gross.
I called Google one of the four horsemen of the apocalypse. So Amazon, Apple, Google, and Facebook control 90% of internet activity.
There you go.
And they have banned books, censored voices, shut down conservative speech, even businesses, and they acted in cahoots with the media, academia, and the government. And these tech monopolies are, all powerful and unchecked. And if you didn't fall in line, you were done.
Remember Alex Berenson?
Yeah.
Alex was.
I worked with Alex for years.
Yeah, he was an old friend of mine. I used to know him when he was at the Times. I was at the Journal. Alex became a vaccine skeptic. I don't agree with him on a lot of this stuff, but I don't believe he should have been shut down from Twitter. He sued Twitter, and they settled with him and put him back on because he found that the Biden administration was telling Twitter to shut him down. Think about how gross that is. If that's not a violation of law, of the Constitution, I mean, forget about what Brendan Carr's doing. He's got the law on his side if he really wants to go there. There's no law here. The First Amendment's pretty clear, particularly Section 230 of the Communications Act says, the internet is pretty free.
And this is what kills me. January 10th, Zuckerberg goes on Joe Rogan, and he's talking about this issue, and he says basically these people from the Biden administration would call up our team and like scream at them and curse. It just got to this point where we were all like, no, we're not gonna take down things that are true. That's ridiculous. Except they did do it. And then when he came after Trump was elected and he's saying, oh, well, we didn't want to do it or we were pushing back. No, you weren't pushing back. You weren't pushing back at all. And that's the problem that I have with them now, trying to get on the Trump train and saying, no, we're all about free speech. We were forced to do it, playing victim to a certain degree. And so there's part of me that also asks the question, though, it's a chicken and egg question. Was it their fault that they didn't fight back hard enough, or was it the administration's fault? Because I don't think we've ever seen what we saw under the Biden administration of the censorship and the tentacles reaching out in the blatant way that they were doing it.
Obama did it too.
Okay.
Go back to the Comcast NBCU deal. Remember that? I was at CNBC at the time, I believe.
Yeah.
I went back, someone directed me to it, because they were saying, if you really want to see politics at work, look at the conditions that Comcast agreed to. So if you go towards the end of there are like 150 or something. Go at the end, they literally say, Comcast, we agree to do programming that meets these DEI criteria. We agree to hire based on these DEI criteria.
So is that an FCC? Was that FCC involvement dictating that?
But,
see, this is my problem.
The DOJ antitrust.
Yeah, but see, so why do we have the FCC anymore? We don't need an FCC. Why don't we get rid of this?
Yeah.
Why? Because the FCC...
Just get rid of the government.
Then it would be a free-for-all.
No, but this is the problem, is the government has these tools, and yes, I agree it's bounded by law. They find a way to stretch that, and then pretty soon they're throwing the hammer down everywhere.
Well, the FCC was created because in the 30s we had the radio.
I get it. No, I get it. In the 30s, auction off those frequencies.
Oh, it's in the 30s.
And privatize it and get rid of it. Because I guarantee you're going to get a Democrat administration is going to come in and say, you see what Brendan Carr did with the FCC. So let's do that now to the guys we don't.
But here's the thing. The FCC's power does not extend to cable.
Right.
It does not extend to
but Charlie, I understand that. But these guys always find a way to extend the power.
They tried. They can't.
Charlie, you
think
these guys play within their boundaries?
Wait. You could call up Mark Zuckerberg and yell at him. Okay.
Which is what they did, and he complied.
Okay, well, because he's a wimp.
Right.
I almost said
that. Charlie, they're all wimps when it's together.
You can't stop wimpage.
All of these.
Sorry.
But it was in their...
It's illegal what they did. And by the way...
And they still do it.
And guess what? People that got canceled, when they sued because it was illegal, they got reinstated.
Yeah. But
because
they
it's illegal.
Have to.
5 years later.
It's called
5 years later.
It's called life. It's going to happen. I'm just saying that the FCC's irrelevance will come, and it will come because
it's here.
All this stuff. No, it'll come.
It's here.
It'll come because no one's watching
Kimmel.
Yeah,
Kimmel and ABC and all that.
I just wanted to tie these together because it's in Zuckerberg and his ilk know now that it's in they will earn more cabbage in this environment if they embrace conservatives and embrace the Trump administration from a regulatory perspective. They only care about themselves.
And their shareholders. They have an obligation to their shareholders. And if you look at all these CEOs, whether it's Tim Cook at Apple, whether it's Mark Zuckerberg, they all blow with the wind. Sundar Pichai, now they're all going to the inauguration.
I hate to say
Trump's inauguration.
They might be advertisers, but they're sniveling little...
But they have a fiduciary obligation to their owners, to the shareholders, to make money. So if that means making nice with each administration, that's exactly what they're going to do. And that's their number one job. Because
suppose they violate the law.
Yeah, they broke the. It was a
break the law.
violation of the First Amendment, and by censoring scientific discussion of COVID, they literally led to the death of people who did need to die. And I will make that leap.
You know what I like about Brendan Carr? Again, I'm going to sound like a Brendan Carr apologist because I am a free speech guy, okay? And it does turn me a little crazy when I hear him say stuff, we're going to withhold your license unless you do X. But what I like about Brendan Carr is he made this point. He said, listen, you want Section 230 of the Communications Act. You don't want to get sued, okay, if someone puts something libelous. Because remember, that gives them a safe harbor, Google and everybody, if someone says something really crazy on their platform. If you want that, you got to provide both sides of the argument. Then if you don't provide both sides of the argument, guess what? You become a publisher.
Right.
Then you're liable for libel.
Right. You need to have some oversight of it. You can't just wash your hands of it and
either be a publisher or not.
Show both
So
sides.
you're reporting on the Paramount Skydance issue. I just want to note one thing about Kimmel.
Yeah.
He last night said that they got
Who's they?
Stephen Colbert fired.
Who's they?
Meaning
Me?
President Trump got Colbert fired. That's the new lie that they're spinning.
Yeah.
I just wanted to point that out because
I like the they.
They.
Yeah.
I always worry about they.
I do too. Go ahead. What's up with Paramount Skydance?
They have not bid yet on Paramount. Excuse me, on Warner Bros. Discovery. Interesting point. As you know, right after the Paramount deal, Skydance, David Ellison, the son of Larry Ellison, they obviously have a lot of bank, right? Larry's worth what now? $300 billion, number 2 richest guy. They made, stories broke, I actually was part of the reporting, that they were going to make a bid for Warner Bros. Discovery. Yep. Okay, now, 3 weeks later, not there. Why not? So I did a little reporting yesterday. Here's what I found. They're worried about approaching Zaslav, and Zaslav using whatever bid they have, and they don't want to overpay, to entice Netflix. So they're looking for a way, and actually an entree point, an intermediary. From what I understand, they may employ John Malone to get to Zaslav and explain that, listen, this is a real bid. You should really sell Warner Brothers Discovery. You have no other buyers but us because of antitrust laws, and do the deal. And they're waiting for a way to do that. I guess they have to convince Malone. Now, I know a lot about what Zaslav is doing behind the scenes, just from my sources. From what I understand, he's not going to take the $24 that David Faber recently reported that was going to be their bid, which is why they probably didn't bid $24. I thought that was an interesting leak that they gave CNBC to try to, I guess, set a floor. He wants more like 30 plus. And he thinks he can get 30 plus, not just for the whole thing, but for his half, the streaming and the studio. And who does he want to bid against? Ellison? It's Netflix and Amazon. He's fielding interest from both of them.
Love your reporting. Oh my God, I'm fascinated because Warner Bros. Discovery, that is just a merger.
It's doing better now.
Barely.
No, it's still a lot better.
Okay, better. We have more after this.
Welcome back. OpenAI, Oracle, and SoftBank announced major expansions to their Stargate data centers. Fox Business's Madison Allworth is in Abilene, Texas, with the details for us. Madison, how much money are we talking about here?
Jackie, with this expansion, we're talking about $400 billion in commitments and nearly 7 gigawatts of planned capacity over the next 3 years. That puts Stargate right on track to hit their commitments made back in January. That's $500 billion and 10 gigawatts commitment under the Trump administration. So this expansion, we're talking about 5 new Stargate data centers across 3 states with an additional one to be announced in the Midwest. This is one of the largest infrastructure projects in American history. It's not roads, but you can think of it as digital roads. And we got one of the first looks at the flagship Stargate site in Abilene, Texas. The plan here is 8 buildings with 5 data halls in each one on this 1,100-acre property. It is massive. To understand the size, we're talking about 833 football fields. But right now, there's only 2 buildings up on that site. I spoke to both Oracle and OpenAI's CEOs, and both told me that speed is a priority because their technology is currently capacity constrained without these data centers up and running.
And so when we come walk sites like this and look at the incredible work, the first thing we think is, this is awesome. And the second thing we think is we have to figure out how to do much more, faster, better, cheaper, to continue to meet what the demand scales will be years from now.
But some critics say too much money is being thrown at AI, and there's talks of an AI bubble. But Republican Senator Ted Cruz says that's not the case, and he tells us that this is the single most important issue of our time, one of the single most important issues of our time, and it means the difference between authoritarian and democratic artificial intelligence.
This is like a tsunami. If you don't like it, you can't hold out your hand and say stop. It's coming. And the only question is, does America set the values? Does America lead? Does America enjoy the benefits of it? Or do we allow China to set the values and enjoy the benefits and leave Americans as the losers?
So, Jackie, we got that amazing tour yesterday, but we are off-site today because they're back to full construction. Speed is important to them, as we laid out. Oracle says those final buildings, bringing them to the 8 total, that should be done by next year.
Jackie? Madison Allworth, great reporting. Thank you so much for bringing that to us. And I think Ted Cruz sort of laid out the case there that we've been talking about when it comes to AI and all this expansion. It's a tsunami. We can't control it. We know there may be some dangers, but do we want China to just forge forward and not be a leader in this? At the same time, there are risks, Charlie. So how do we manage it? Because when you hear from Sam Altman, you expect him to put the pedal to the metal to make money.
I think he let the free market handle it. I think he let what the free market did with the internet. I mean, listen, I remember when everybody was, people were putting .coms at the end of their company's name just for a higher valuation. Martha Stewart, omnimedia.com. Never forget that. Company ultimately blew up with the rest of the .com bubble and pets.com and all that sort of stuff. But there were survivors that became these great American companies, Google, Amazon, Apple to a certain extent. They were a little different, but they were born out of that whole .com thing. Steve Jobs came back to the company, and I think that's what we're going to have here. But, I mean, be ready for a correction. So if we're saying that our economy right now, AI, when we made this point before, that this thing is going to power GDP, it's also going to, create massive productivity gains, which deals with inflation. If that's what we're banking on, if history is any guide, and by the way, past performance is not a guarantee of indicative of future, but just based on history, there's going to be a correction here.
I'm glad that you brought that up.
And then when there is a correction, it'll redound to the entire economy. Listen, I wrote a book about the .com crash and its impact on average Americans, how they lost tons of money in buying these crappy .com stocks, and the economy kind of languished there for like 3 or 4 years. We could have something like that. I mean, it's not implausible.
So it's kind of like how close are we to that moment? You're going to have a moment where you're going to find out stuff was wrong. When a tsunami washes out, you find out what got wrecked, right? So that's going to happen.
Don't time it, though.
But here's the question. So what are the indicators of that? And one thing we talked about yesterday that I thought was interesting, and Tom, I want to get your perspective on this. We were talking about a lot of vendor financing happening in this space. Okay,
sure.
So there's going to be 60,000 NVIDIA chips in these data centers, and NVIDIA is sending a lot of cash in the direction of OpenAI to buy those chips. At some level, when you got that much vendor financing and you're not getting your financing from your customers, you got to ask, are you sort of in a bubbly situation that could come sooner rather than later?
I think so, and I think it's to the point about maybe the indices are fully valued, as Jay Powell was saying, but under the surface. So what's the play? Today, everything's down. Mag 7 is down. You know what's up? The only sector that's exclusively up is energy, okay? Energy, the AI industry is writing checks that the energy industry cannot cash, okay? That is the bottleneck for AI. So when you look forward, there's going to be 165% of increase in demand for data center by 2030, according to Goldman Sachs. 60% of that is going to be powered by natural gas. These stocks, the energy sector is trading at 15.2 times earnings, okay, compared to the S&P 500 at 22 times. They are going to have 17% earnings growth next year, which is the second highest earnings growth sector. That's greater than the S&P overall at 13%.
So it's great for energy stocks, but let's get back to AI stocks. Do we have enough energy? I mean, I just wonder, without nuclear, I mean, listen.
By the way,
Trump is pro-energy. One of these sort of, listen, I talk to a lot of short sellers around NVIDIA. NVIDIA is a very shorted stock. not because people are betting totally against it. It's a hedge. You know, you hedge it. You hedge your winnings with some shorts, right? Yeah. So, but some of their thesis is that we don't have enough energy to power AI, and that will spur the slowdown. And again, I will just say this: you know, there's often a reckoning here, and it gets a little nasty. Now, the one thing I don't know, and we all don't know, is this sort of, you know, did the Sam Altmans of the world and all these AI guys, I mean, you learn from past experience too. You know, that losing that much money wasn't that long ago teaches the tech industry, the VCs, not to throw good money after bad. They're not throwing money at pets.com here. You know, OpenAI is a real company.
But I've used the comparison to the infrastructure build out in telecom back in
Global Crossing.
Oh yeah, Global Crossing.
99,
good friend of mine right now.
Yeah. But this is way more money as a percentage of GDP.
Say it again?
This is way more money invested in just data centers as a percentage of our GDP today than the telecom investments back then. Right. It is like inching toward 2% of GDP. Back then, it was like 1% of GDP. That investment, even if it wasn't used in the moment as the dot-com bubble burst, it was still usable down the road. That was infrastructure that was built, that was functional and useful years out. This is only good for 3 years.
Global Crossing was used, by the way, those pipes.
I'll give you a perfect.
This is only good for 3 years because of the life of the chip, in essence.
Yeah, I'll give you a perfect example to all of your points. Amazon.com, 2000. The stock was pricing in 15 years of good things to come. Everything they promised would happen, they actually fulfilled on and more. The problem was the stock in 2000 was pricing in all of those great things happening already. And over the next 3 years, the stock price fell 90%, even though revenues kept going up, earnings kept going up.
It was an $8 stock.
Cash flow kept going up.
Well, what?
The fundamentals
they weren't doing
kept
it fast enough for the market.
Exactly. So the question is, how much of all the good that's to come in AI is currently already priced in some of the stocks that are trading at 100 times sales, 200 times sales? And
I'm just going to say this: is this a shoe shine boy moment? Like I get pitched once a day on a new AI company. You got to see my company. You got to write about it. And I'm like, no.
I will get. He mentioned Alibaba at the top of the hour. The fact that Alibaba's shares are soaring because they're spending money.
Yeah.
Spending, AI's budget goes past $50 billion. That's fantasy land.
Yeah.
All right.
Yeah. Well, they had when we got involved, they had $80 billion of cash on their balance sheet, and you don't get credit for cash. You only get credit for potential future earnings power. So they're putting that cash to use because they're finally saying we have a way to get a higher return on invested capital by investing in AI than just buying back our own shares, and that's why the market loves it.
But are they getting a higher return? Nobody really knows. They just like the AI.
Well, they're generating $20 billion.
I can flush it down an AI toilet for you.
Let's not
then
go
you'll
there.
need a plumber.
We'll leave it here. Coming up, a Trump executive order that allows Americans to diversify their 401k portfolio beyond stocks and bonds just got a big stamp of approval in Washington. We're going to tell you what it means for your money next.
Well, retirement savings could be getting a major upgrade. Key GOP lawmakers are now backing the president's new executive order allowing Americans to invest their 401k into alternative assets, including cryptocurrency. They argue in a letter to SEC Chairman Paul Atkins that the change would bring more choice to those saving for retirement. Critics call it risky, but proponents say it gives more Americans access to the financial future. So, Tom, make sense of this for us. It's by definition going to be riskier. You're expanding the pool of assets. But is it the right kind of choice for people who want to move portfolios into a more future-oriented posture with respect to what people are investing in? What do you think?
Yeah, I mean, as a value manager, I would say no. What you need to be is in all value stocks. But I think it's people's money, and they should choose what they think is going to best provide for their future. If that's crypto, if that's growth stocks, if that's value stocks, if that's fixed income, according to their risk profile and their other sources of income, I think that's critical. As long as they allow hedge funds, I'm okay with it. But
are they? I don't know about that.
I don't think they are.
They'll
allow private equity and private credit now.
Private credit.
So we just need better lobbyists on.
I would just say this, as an allocation for some people, their 401k as an investment vehicle may be the only thing that they have in the market or in, sort of the financial instruments that are out there. So I think giving people more options is definitely beneficial. And there are people that want to dip their toe into crypto that have a long time horizon, that understand the risk assessment. And so I think they can make smart decisions about it. I think making it more ubiquitous is a good thing for people.
And let's face it, we just sat here for like an hour talking about how stocks could be risky.
Yeah.
I mean, so we're saying, okay, well.
Yeah, but is it from the kettle to the frying pan or vice versa situation?
Diversity.
It's called diversification, which generally doesn't mean that.
Dig, I want to get you in. What do you think about this?
They're going to open it up. I'm all for it. It's your money.
Yeah.
It belongs to you. It belongs to no one else in a 401k plan. But when it goes bad, folks are just going to sue. They're going to sue anybody that they can think of for their own mistakes.
They sued it. They sued after the dot-com bubble burst. I know that for a fact.
There is just no willingness to take personal responsibility for your own actions in this day and age. And I say that broadly. That was the first thing somebody said to me this morning.
But if you have a Vanguard open infrastructure account, and I say, I want to buy some crypto and put it in a Roth IRA or whatever, who am I going to sue?
It doesn't matter if it.
It doesn't matter. Probably sue Vanguard and say that was unsuitable for me. Someone should have guided me to lower the percentage weight based on my age, et cetera, et cetera. So I think they can hit the nail on the head. If it goes well, everyone's happy. If it doesn't go well, they
don't advise you.
It doesn't make sense. It's the woman whose son died surfing on a subway car, and she's suing TikTok and Instagram.
Yeah, we got to go. Charlie, great stuff. Thanks for that. Stick around for us for the next hour of the Big Money Show. Kudlow's up.
Today's Wealth Transfer segment is brought to you by Vanguard.
And that is how you brew a mighty fine American business.
Fly me to the moon, let me play among the stars, and let me
You shall receive. Welcome back to the second hour of the Big Money Show. I'm Jackie DeAngelis, along with my outstanding co-host, and joining us for the hour, and he gets Frank Sinatra, is the one and only Larry Kudlow. Great to have you.
Can I say one thing?
I would have gone Louis Armstrong, but Frank Sinatra's an improvement.
Opens the film Wall Street.
Good memory.
All right, so markets are searching for direction as Jerome Powell signals further rate cuts are not guaranteed. Meanwhile, Treasury Secretary Scott Bessent says he's less concerned about a recession. He believes we will see a substantial drop in inflation, and he says that rates have been too high for too long. Listen.
The Federal Reserve has been too high for too long, and we're going into an easing cycle here. And I'm not sure why Chair Powell has backed up a bit here, because, as we can see, we inherited a mess. We have a destination before the end of the year of at least 100 to 150 basis points.
All right, but Powell keeps saying that there are near-term risks to inflation. They are tilted to the upside. He said that yesterday, Larry, so he is still worried about it. And others are saying we've got to see what this data on Friday says before decisions and conclusions can be reached.
Yeah, it's not that important, Friday. I don't know. It's just one number. I'm not sure it matters. The trend here has got to be down. Powell, by the way, I don't know that he said that much about inflation. By the way, notice he went to Rhode Island.
Yes.
Guess what? Guess what he was doing up there? Because the Democratic senator, what's his name, got him to go up there, even though it's a Republican.
Is that White House up there?
White House?
Yeah, that's Sheldon Whitehouse from the banking committee. You can see his little picture right there.
A lot of story behind that.
Isn't that something?
Yeah.
It's just, I mean, there's no reason for him to go to Providence, Rhode Island. What's in Providence, Rhode Island? Nothing.
We asked that question yesterday amongst ourselves. We thought, why is he going there?
That's the reason, because he caters, because Powell's always been closer to the Democrats than to the Republicans. Yeah. All right, that's part of his...
You mean Sheldon only White's in the house, Mr. Country Club, Sheldon Whitehouse?
Well, whatever you want, and I don't want to call him names. I just want to call him his name, just to say that. That's what.
No, that's my job.
So the other thing I want to say is, I like this easing cycle idea from Scott Bessent. I also like what Steve Myron said at the Economics Club of New York. I mean, Myron, it was a long paper, and it's worth reading, by the way. It's rather academic, but very well done. But his thesis is the Fed has been too tight, and it's going to affect the labor market. Yeah. Okay, so he's worried about the job story and the unemployment rate. Is he right? Yeah, I happen to think he's right. How big is he right? I don't know. The other thing he said is the so-called neutral rate isn't 3. It's really closer to 2. And he uses his market. This is the cool part. He uses a market indicator, okay? He uses the 5-year forward, which is very interesting. It's an economist number, but it's a trader's number. They know all about that. That's kind of the real rate. It's about 2.3%, 2.3%. So that's lower. If you buy that, that's lower than the Fed's neutral rate of 3%. Now, some people are second-guessing Myron. I don't want to make this too complicated, but they're saying, well, that's a real rate. Yes, that's what it is. And you have to add 2 percentage points on inflation, so the Fed funds rate should be 4% plus. I don't know if I agree with that. I mean, Myron makes other points. There's supply-side policies that are going to keep prices down. Tax cuts, the Fed doesn't include that. Deregulation. He didn't mention AI, but he could have mentioned AI. I mean, the short rate is too high. That's all. It's too high.
Big picture, you know, you listen to what Powell said, and he was kind of like scared Powell. Risk is everywhere, Powell. Inflation might be creeping up. Unemployment might be creeping up.
No matter what I do, I can't get it exactly right.
Yes, and
kind of what he was doing.
So Jackie and I were talking about this. To me, it felt like a guy who's been called too late a lot is trying to find a fact pattern that helps him justify that name. Is that too harsh, or do you think that's right?
It's probably right. Look, I don't really care what he says. I mean, I don't. It's just not as important. You now have three Trump appointees on the board. You're about to get a fourth. Lisa Cook has been fired, and she's going to stay fired because the Supreme Court fired the FTC lady, okay? And they didn't accept the stay or the injunction, okay? So that's going to be 4. So I don't know that I really care what Jay Powell said. I don't know that I ever cared what Jay Powell said.
We always remind everybody they all get equal votes. Yes, he might set the direction and there may be conversations behind the scenes, but they all get equal votes. So if they choose to go against him, then so be it.
Well, yeah, that's correct. And it's just interesting. These arguments are interesting. I'm trying to bring out the full flavor of the argument. Myron is giving you, come back to this 5-year forward thing on the treasury. It's in the TIPS market, right? Okay. It's a market-based measure of the so-called neutral rate or the real rate. He's the first guy to really point that out. I think that's very cool. Now, you might not even agree with it. Okay, I'm just saying. But I thought it was very interesting that he put that in. Here's another point. The Fed's targets, look at their growth GDP targets, right? So it's 1.8 forever. Is that right? Yeah. Okay, now, I ask you, if your central bank is telling you that you can only grow at 1.8%, which is kind of pathetic.
That's unfortunate,
okay? It's almost as bad as Europe, you know, which Trump took out yesterday at the UN. So that tells me you have to do something different. Because we should never accept 1.8% growth. Correct. The whole history of this country over long periods of time is 3.5% real growth. You look at it post-World War II. Look at for the whole 20th century. Look at for the whole 19th century. So it tells you something is very wrong. And I think to some extent that's what Steve Myron was trying to say. Something is wrong. Now we're fixing it on fiscal policy is improving with lower taxes and fewer regulations. It's now time to fix it with monetary policy. The nation should not accept 1.8% economic growth.
Right.
That's a lousy target. The CBO is the same way. All of the establishment people in Washington, D.C. are managing a decline in America. I don't want to manage a decline in America. I want to manage a revitalization of America.
Are they managing
I want to
it?
manage a golden age in America. I don't want to accept 1.8% ever.
Are they managing it, or to Scott Besson's op-ed in the Journal, which I keep going back to, is the Fed partially responsible for creating this environment because of its monetary policy?
But that's what I've said.
Yeah.
What I'm saying is they're all in cahoots managing a decline. 1.8% is unacceptable.
Okay.
When you have the hearings of the Fed and you go before the banking committee, all right, people should be making this point. We have the capacity in this country, and Myron talks about this, we're increasing the capacity because of these phenomenal depreciation rates and tax cuts and so forth. We should be setting a growth target of 3.5%. which equals greatness, which equals make America great again, which equals a golden age in America. Something is fundamentally wrong if you're going to settle for 1.8%.
You bring up a very important point.
That's like Germany minus, for heaven's sake.
And I want to just go to somebody else on it. Thomas, I'll come to you. This begs the question, do we need the Fed anymore?
Well, we do need the Fed, but I will say post-World War II, we were at 125% debt to GDP. By 1957, we were at 63% debt to GDP. How did we do that? We did it through growth, massive growth. And by the way, we ran inflation a little bit above trend, 3 to 5%. We had massive growth, debt to GDP came down. Here's the thing about the dual mandate. One side you can fix if you're wrong, the other side you can't. If you're wrong on employment and the layoffs start, you can't put that genie back in the bottle. It's deflationary. If you're wrong on inflation, and let's say that...
Let me
You shall receive. Welcome back to the second hour of the Big Money Show. I'm Jackie DeAngelis, along with my outstanding co-host. And joining us for the hour, and he gets Frank Sinatra, is the one and only Larry Kudlow. Great to have you.
Can I say one thing?
I would have gone Louis Armstrong, but Frank
That
Sinatra's
song
an improvement.
opens the film Wall Street.
Yeah.
Good memory.
All right, so markets are searching for direction as Jerome Powell signals further rate cuts are not guaranteed. Meanwhile, Treasury Secretary Scott Bessent says he's less concerned about a recession. He believes we will see a substantial drop in inflation, and he says that rates have been too high for too long. Listen.
The Federal Reserve has been too high for too long, and we're going into an easing cycle here. And I'm not sure why Chair Powell has backed up a bit here, because, you know, as we can see, we inherited a mess. We have a destination before the end of the year of at least 100 to 150 basis points.
All right, but Powell keeps saying that there are near-term risks to inflation. They are tilted to the upside. He said that yesterday, Larry, so he is still worried about it. And others are saying we've got to see what this data on Friday says before decisions and conclusions can be reached.
Yeah, it's not that important, Friday. I don't know. It's just one number. I'm not sure it matters. The trend here has got to be down. Powell, by the way, I don't know that he said that much about inflation. By the way, notice he went to Rhode Island.
Yes.
Guess what? Guess what he was doing up there? Because the Democratic senator, what's his name, got him to go up there, even though it's a Republican.
Is that White House up there?
White House?
Yeah, that's Sheldon Whitehouse from the banking committee. You can see his little picture right there.
A lot of story behind that.
Isn't that something?
Yeah.
It's just, I mean, there's no reason for him to go to Providence, Rhode Island. What's in Providence, Rhode Island? Nothing.
We asked that question yesterday amongst ourselves. We thought, why is he going there?
That's the reason, because he caters, because Powell's always been closer to the Democrats than to the Republicans. Yeah. All right, that's part of his...
You mean Sheldon only White's in the House, Mr. Country Club, Sheldon Whitehouse?
Well, whatever you want, and I don't want to call him names. I just want to call him his name, just to say that. That's right.
No, that's my job.
So the other thing I want to say is, I like this easing cycle idea from Scott Bessent. I also like what Steve Myron said at the Economics Club of New York. I mean, it was a long paper, and it's worth reading, by the way. It's rather academic, but very well done. But his thesis is the Fed has been too tight, and it's going to affect the labor market. Yeah. Okay, so he's worried about the job story and the unemployment rate. Is he right? Yeah, I happen to think he's right. How big is he right? I don't know. The other thing he said is the so-called neutral rate isn't 3. It's really closer to 2. And he uses his market. This is the cool part. He uses a market indicator, okay? He uses the 5-year forward, which is very interesting. It's an economist number, but it's a trader's number. They know all about that. That's kind of the real rate. It's about 2.3%, 2.3%. So that's lower. If you buy that, that's lower than the Fed's neutral rate of 3%. Now, some people are second-guessing Myron. I don't want to make this too complicated, but they're saying, well, that's a real rate. Yes, that's what it is. And you have to add 2 percentage points on inflation, so the Fed funds rate should be 4% plus. I don't know if I agree with that. I mean, Myron makes other points. There's supply-side policies that are going to keep prices down. Tax cuts, the Fed doesn't include that. Deregulation. He didn't mention AI, but he could have mentioned AI. I mean, the short rate is too high. Well, it's too high.
Big picture, you know, you listen to what Powell said, and he was kind of like scared Powell. Risk is everywhere, Powell. Inflation might be creeping up. Unemployment might be creeping up.
No matter what I do, it can't get it exactly right.
Yes, and
kind of what he was doing.
So Jackie and I were talking about this. To me, it felt like a guy who's been called too late a lot is trying to find a fact pattern that helps him justify that name. Is that too harsh, or do you think that's right?
It's probably right. Look, I don't really care what he says. I mean, I don't. It's just not as important. You now have three Trump appointees on the board. You're about to get a fourth. Lisa Cook has been fired, and she's going to stay fired because the Supreme Court fired the FTC lady, okay? And they didn't accept the stay or the injunction, okay? So that's going to be 4. So I don't know that I really care what Jay Powell said. I don't know that I ever cared what Jay Powell said.
Because we always remind everybody they all get equal votes. Yes, he might set the direction and there may be conversations behind the scenes, but they all get equal votes. So if they choose to go against him, then so be it.
Well, yeah, that's correct. And it's just interesting. These arguments are interesting. I'm trying to bring out the full flavor of the argument. Myron is giving you, come back to this 5-year forward thing on the treasury. It's in the TIPS market, right? Okay. It's a market-based measure of the so-called neutral rate or the real rate. He's the first guy to really point that out. I think that's very cool. Now, you might not even agree with it. Okay, I'm just saying. But I thought it was very interesting that he put that in. Here's another point. The Fed's targets, look at their growth GDP targets, right? So it's 1.8 forever. Is that right? Yeah. Okay, now, I ask you, if your central bank is telling you that you can only grow at 1.8%, which is kind of pathetic.
That's unfortunate.
Okay? It's almost as bad as Europe, you know, which Trump took out yesterday at the UN. So that tells me you have to do something different. Because we should never accept 1.8% growth. Correct. The whole history of this country over long periods of time is 3.5% real growth. You look at it post-World War II. Look at for the whole 20th century. Look at for the whole 19th century. So it tells you something is very wrong. And I think to some extent that's what Steve Myron was trying to say. Something is wrong. Now we're fixing it on fiscal policy is improving with lower taxes and fewer regulations. It's now time to fix it with monetary policy. The nation should not accept 1.8% economic growth.
Right.
That's a lousy target. The CBO is the same way. All of the establishment people in Washington, D.C. are managing a decline in America. I don't want to manage a decline in America. I want to manage a revitalization of America.
Are they managing
I want to
it?
manage a golden age in America. I don't want to accept 1.8% ever.
Are they managing it, or to Scott Bessen's op-ed in the Journal, which I keep going back to, is the Fed partially responsible for creating this environment because of its monetary policy?
Well, that's what I've said.
Yeah.
What I'm saying is they're all in cahoots managing a decline. 1.8% is unacceptable.
Okay.
When you have the hearings of the Fed and you go before the banking committee, all right, people should be making this point. We have the capacity in this country, and Myron talks about this, we're increasing the capacity because of these phenomenal depreciation rates and tax cuts and so forth. We should be setting a growth target of 3.5%. which equals greatness, which equals make America great again, which equals a golden age in America. Something is fundamentally wrong if you're going to settle for 1.8%.
You bring up a very important point.
That's like Germany minus, for heaven's sake.
And I want to just go to somebody else on it. Thomas, I'll come to you. This begs the question, do we need the Fed anymore?
Well, we do need the Fed, but I will say post-World War II, we were at 125% debt to GDP. By 1957, we were at 63% debt to GDP. How did we do that? We did it through growth, massive growth. And by the way, we ran inflation a little bit above trend, 3 to 5%. We had massive growth, debt to GDP came down. Here's the thing about the dual mandate. One side you can fix if you're wrong, the other side you can't. If you're wrong on employment and the layoffs start, you can't put that genie back in the bottle. It's deflationary. If you're wrong on inflation, and let's say that, he acknowledged yesterday, by the way, that tariff-based inflation never really came. Okay, he acknowledged it was less than expected. He could actually hike rates 25 basis points if he got that wrong.
He got it wrong.
If he gets employment wrong, and you've seen it before, you keep cutting rates and it's deflationary and you got fear and you got this negative spiral. And I'm worried about employment, that you got this boiling frog in a pot and they're saying we can be 200 basis points restrictive. Just look, the unemployment rate's only 4.3. And when it shifts, it shifts. And you saw all these
What
revisions.
are we afraid of? What? Just take a rip at the ball.
Yeah.
Stop playing with these little 5 basis points, 25 basis
Well, we
points.
did have 9% inflation not that long ago. People did.
Yes.
That killed people.
Yes, we did. But those people were thrown out of
What's a
office.
rip?
They were.
Where should
Open the spigots. Slash taxes, lower interest rates, let the money supply breathe just a little more. These guys are sitting around fine-tuning it with their lousy 1.8 projections.
This administration could lower.
I don't want to manage a declining America.
This administration
That's what
could
Trump is
lower
saying.
long-term interest rates right now, but it's running a deficit bigger than it was last year.
No, it's
yes. The fiscal deficit is larger.
Dagan, for God's sakes, you're going to have a $300 billion tariff revenue increase. So don't go back there. You're wrong about that.
I am not wrong about that. You want me to quote what the Treasury put out a few days ago?
What did you put
about
in?
how big the deficit is this year?
What did you put in for tariff revenues?
Tariff revenue, it's going to be $300 billion annually. Awesome. That's going to cover 3 months of the interest on our national debt.
Well, that's.
But if you lower rates, you're going to save $600 billion a year in interest costs.
Right, and rates are coming down. I mean,
my point is that if we are fiscally responsible, then cut. That's why.
Cut what?
Cut spending.
Well, yeah, okay. They're trimming spending. You know, cutting spending sounds great, but it's a very difficult thing to do. But they did a good job in the One Big Beautiful Bill. And by the way, I would say to you this. I don't know your Treasury number for 2 days ago or 3 days ago. My estimates were that if you grow the economy at 3 to 3.5%, you're going to pick up, I don't know, Kevin has $4 or $5 trillion more in revenues. On top of that, this is over 10 years. On top of that, the 10-year estimate for revenues from the tariffs is now up to $4 trillion, according to the CBO. All right, so I just got you. I'm almost at $10 trillion. Okay, growth and the tariff story. That's very good. There is spending cuts, by the way. They cut almost $2 trillion, waste, fraud, and abuse, and eligibility. So you got to add that in. So you're probably, you could be up to $12 trillion. That's a terrific thing. That's going to help the deficit, et cetera, et cetera. It's going to bring it down substantially, Dagan. But I want to tell you, Tom's right. In the longer run, the way to get the deficit down as a share of the economy, and the way to get debt down is to grow. We must grow. And I come back to this. Opportunities for young people, for Gen Z, okay? Affordability, housing, job opportunities. We should not settle for this subpar economic growth. We do not want to emulate what's happened to Europe. The sclerosis in Europe is not something I want to emulate. So every time a government agency, whether it's the Fed or the CBO or the Joint Tax Committee or the OMB, when they give you a long-run estimate of 1.8% or worse, you have to say something's wrong with our policy. We're letting the country down, and that's the way you should think about this. It's not. I do, and that's why it's not a question. It's not a question of an 05 here or 10 day, where Jay Powell says stocks are hugely valued in Rhode Island. What does he know about the stock market? I mean, this is his irrational exuberance moment. I got Ed Yardeni giving me double-digit increases in profits every week that he does his newsletter. So, you see what I'm saying? Shoot for the sky. Yeah. Just go for it. Open the spigots.
Well, you mentioned
take
tariff revenue. That's partially a value-added tax, so we are a little bit more like Europe than we were at the beginning of the year. The biggest problem is the Trump administration is talking about the Federal Reserve as if they're going to do something different. And right now, if they cut rates like they're talking about, the Federal Reserve, it's going to juice the bubble and juice the speculation in assets galore even more than we're seeing now. And it will blow up, and the Fed will have to intervene and be the FEMA of last resort for economic losses. And it is no more. They have to stop, and they will do it again. Mark my words.
You should take a risk. Open those spigots. I want to give,
There's too much risk being taken on the backs of the American taxpayer. We've seen it before. The banks got bailed out on the backs of people who are still suffering.
Dagan,
we got it.
Don't live always worst case in the past. Vision should always be positive and optimistic. That's called leadership. The worst doesn't happen every day. And for every time that you have a crisis in this country, the economy snapped back and still grew at 3.5% through depressions and recessions and financial mistakes. I get that. Don't judge the best case from the risks of the worst case. Let her rip. Give everybody give these kids an opportunity to achieve their American dream. That's what America's all about. We are not Europe. Don't ever limit our horizons. Just take a rip at the ball. That's what Trump is saying.
We got to stop letting this
glass half full
rip. We got to close the spigots now.
All right, coming up, our New Yorkers.
.com.
Reality is setting in for New York City business leaders. The latest poll shows Zohran Mamdani leading all other candidates in the mayoral race by 20 points. Now, business leaders are forming an advisory group to guide the socialists if he wins November's election. But will Mamdani listen to any of their advice? Business and communism don't usually mix well. Larry, the way this goes is they come together and say, if you just do what we ask and don't screw us, don't screw our businesses, we will fund a presidential campaign for you.
Oh, I don't know. You can have a lot of committees. He's not going to listen to any of those people. I mean, since it's all bogus. Committees, advisory committees. I don't know who's on these.
Well,
committees.
that's the question, right? Who are the people on this committee?
Kevin O'Leary tried to have a meeting with him, and the last we spoke to him, he said he wouldn't meet with him. And so you have interest in people saying, all right, we'll sit down with you. If you're going to be the guy, we want to see how you're going to do this. But he doesn't want to play ball in that way.
I mean, I think, just if I can jump in on who this is.
Who is?
This is an attempt to launder Mamdani's socialism, communism through something that sounds like business. It's coordinated by One NYC, which at best is some New York City group, like government group. At worst, it's sort of like a union push thing, a union which has endorsed Mamdani, by the way. It's there to develop, Larry, because I know you love this, forward-thinking policy models, okay? And the guys who are on it, I'm looking at their businesses. One of them runs Business Insider, I guess. You can decide what you think about that. Another one owns taxi medallions. I just don't think I don't think there are real capitalists on this committee. Well, I don't think it's a committee that's going to help move him in a capitalist
You can always find left-wing business people.
That's what I'm saying.
Right? You can always find left-wing business people who probably try to cut a deal for their own left-wing business. I think, again, the most important thing here, Mamdani wins, and it looks like he's going to win, although there will be debates, and Curtis Sliwa will knock him around in the debates, and I'm for Curtis for whatever that's worth. But this is for Elise Stefanik. This is going to help her governor's race. She'll be the next Republican governor. She'll change the legislature up in Albany. Mamdani becomes kind of some Democratic poster child. It's exactly what they don't need right now. Did you see these polls that came out? This is the Washington Post poll. Trump, let's see, Trump is +7 on the economy, +13 on immigration, and +22 on crime. Those are pretty good numbers. And the Democrats want to spend another $1 trillion on a continuing resolution. And Trump is dissing him. He won't even meet with them, and he's exactly right not to meet with them. So, yeah, the Mamdani thing, it'll be what it'll be. He'll do a few small things. He won't be any worse than de Blasio. We survived that. I think
that's kind of cold comfort, though. You know what I'm saying?
I think
de Blasio's not great.
Better to replace Hochul and try to change Albany, which is really where the power is in New York City and state.
It's a great way to think about it.
But Jackie's making a face because to say, because it was dangerous here, and crime has fallen quite sharply in recent history. It's down this year, and I don't want to go back. Not even a few months.
Yeah, me neither. I'd like to see Stefanik be the governor, but I don't want it to be as a result of a socialist coming into the helm at City Hall.
It's going to happen. It's going to happen. He's coming.
We're going to suffer. It's not going to be good for us.
It's going to be.
I hope somebody will be watching.
It'll give us so much to talk about. It's going to be wonderful. The stupidities that he's going to come up with will be quite remarkable.
I mean, you got through Dinkins.
Trump will come in with the National Guard if there's a crime problem, which is just what the doctor
He's threatened to pull federal funding. So, if we end up being a city that needs a bailout, I don't think we're going to get it from Washington.
Nope. Doesn't deserve it. Doesn't deserve it.
But then we suffer.
But your theory is interesting that Mamdani is a New York problem. It's not an American problem.
Yeah. Actually, it could be an American solution, but that's my perverse political.
But I don't know. Like, is Mamdani not an American problem? Does he not? If he wins, does he not become more of a blueprint for more big blue cities around the country who will end up electing guys like him? If you've got Mamdani in 25 cities across the country that matter, That's American problem. That's a lot of people who got to live under that governance. So that's my only question.
There are I don't know about 25. There are a handful of socialists running around in these blue cities. There are a handful.
Yeah.
And you could say the others are quasi-socialists. On the other hand, you have blue cities and red states that don't have much sway, and you have Trump as president, who will, shall we say, oversee all of this. I mean, I don't. Look, America doesn't have a socialist tradition. Right. We will have we'll have a pop-up socialist from time to time, okay? But on the other hand, some socialists will be defeated, and Trump is just, his basic core policies are so popular right now. I just somehow, Mandami is fun to talk about, but I think he's the exception, not the rule.
Yeah, and people vote their pocketbooks. You saw in Trump 1.0, real wages for Main Street went up dramatically. Main Street did better on a relative basis. Wall Street did fine. Main Street did better in terms of percentage gains and overall flourishing. I think we're going to see the same exact thing happen in Trump 2.0. I think Mamdani will wind up being a lightning rod in this country where people say that's what we don't want. And it may be actually backfire and help the right policies get more widespread adoption.
So will the stock exchange move to Miami?
You know, it's funny. I was headed to Dubai.
Just asking.
Well, they got one in Texas.
The state and local tax rate, we've talked about this. State and local tax rate in New York's 14.8%. State and local tax rate in Miami is 0.
Look, money goes where it's treated best. I was talking to a friend who moved down there a number of years ago. I was headed to Dubai. He goes, you know, when I was your age, the financial centers of the world were New York and London. Today, it's Miami and Dubai. Why is that? Because of favorable policies. That's where money flows to. So it wouldn't surprise me whatsoever.
Could this set and these lights move to Miami? Just asking.
Are you going to pay for the moving truck, Larry?
Fellas, well, it might be worth it on an after-tax
Wait until the real estate market crashes, please. And Miami is a horrible place to live if you want any work done to your condominium that is required by regulations in the state. And I say that from personal experience. What? Because it's a regulatory. It is a regulatory nightmare in a way that nobody likes to talk about.
Dagan, you have a very depressing worldview, if I must say.
No, it's wildly overvalued housing market that already has cracks in it. Why would you buy high when you could buy low after the bottom falls out? That's good business.
Yeah, don't buy high.
Don't buy high.
Coming up, Charles Payne joins us live from the prolific Growth Summit. Stick with Big Money.
America's top economic leaders attending the Prolific Growth Summit today. The exclusive conference in Indianapolis brings together business executives, entrepreneurs, and investors looking to advance American innovation. Host of Making Money, Charles Payne, is there, and he joins us now. Charles, what's going on?
It's electric, Brian. It really is. You can feel it in the air. It's phenomenal. What I love about this is, like, you've got this whole spectrum of venture capitalists and a whole lot of young folks, right? We're in a heartland. People looking for opportunities, people creating opportunities, people here to find deals, people here to learn, make deals. It's just, the whole place is humming. It's really exciting.
So tell us a little bit more about the heartland perspective on this, Charles. We often are talking about Wall Street here, and we're referencing Main Street. You've got kind of those, and I've been there recently for a business conference, and I love the energy, just like you're loving the energy. What are you hearing that might be a message that you're not getting from coastal financial guys?
You know, they understand that they can grow the local markets, right, the interior of the nation, that, to be quite frank with you, the elites still overlook, despite election results and other things like the growth, for instance, of Fox News and our focus on the heartland. But it's not just that, though. They understand their connection to the wider nation, their connection to the rest of the world, their influence and their impact, and, of course, the opportunity. So that's what I'm really getting from it. It's like the sky is the limit. We can build out where we are right now. This is an amazing place and an amazing time. Technology works to their benefit. You know, it's think about work from home, but even more, right? Artificial intelligence, those sort of things. So this whole prolific growth summit is just phenomenal because it's opening up the possibilities, but the energy, these kids especially feel the energy and they want to be a part of it.
I got to take a rip at the ball, Charles. Rip at the ball, man. Take risks. Growth.
That's Larry. That's Larry if you didn't know.
Huge risks.
Talking growth. Hey,
shoot for the skies, Charles. Shoot for the skies. Limitless.
We got energy on set here too. Hey, is Hobby Lobby's David Green there, Charles? Are you going to be interviewing him in your show today?
Absolutely. Cannot wait to talk for him. We carved out some extra time. You talk about a rags to riches story, but someone who stayed true to his Christian roots. That's another underlying theme here. People are really tough, man. They really believe in their faith. Their faith guides them. It's led to their success. Obviously, Hobby Lobby is just a critically important company, and David Green, someone everyone wants to hear his story. I can't wait to share it with the audience.
You know, they have a Hobby Lobby in New York City, in Manhattan. I did not know that, Charles, but my wife knows, and I've been noticing it on the credit card bill a lot lately, so maybe you could ask David Green about that when you see him. Hey, good stuff. We can't wait to catch you at 2 p.m. today. Thanks, Charles.
All right, I'll see if we can get the Fox discount.
All right, see you, man. Okay, so Jackie, you are looking at Lithium Americas, and I know Larry's very interested in this.
Yeah, I sure am. And Edward Lawrence is reporting that Lithium Americas has agreed to let the United States government take a small stake in the company as part of a plan to restructure a $2.26 billion loan that was issued during the Biden administration. But GM holds a 38% stake in Lithium Americas. They have not agreed to allow the U.S. government to be a part of the company. Talks are ongoing, and we talk about this all the time on the program, Larry. The government getting involved. We were talking about it with respect to U.S. Steel yesterday. We've talked about it with respect to Intel or even as far as NVIDIA. Your thoughts?
I have a problem with it. I don't regard it as the kind of free market capitalism that I espouse. I mean, I can see the government sometimes periodically lending a helping hand, but I don't like government ownership. You know what'll happen is a little government ownership now, and then the lefties come in office, and you've set the stage, and it'll be total government ownership. I love free market capitalism. I mean, I don't know why. It's troubling to me that some cabinet members who are very good friends of mine and who come from a market-based capitalist tradition are embracing this kind of, dare I say it, at least quasi-socialism. I'm uncomfortable with it.
Why is it? I don't understand the fixation on the sovereign wealth fund and the owning stakes and owning part of Intel, which, by the way, based on what I've heard, that was pitched to the White House by the CEO of Intel and the board because they were trying to keep their jobs because it's a garbage-run company with a CEO with some weird ties to communist China. But it's just such a bad idea. I did want to point out General Motors still owes the American taxpayer $11 billion. So we lost that much on GM's bailout. Larry?
You know, I don't want, the mission here is, make America great again, build factories, be the world leadership in chips and other areas, lithium, rare earths, I guess you're talking about. I love attracting private capital, which I think is what's happening. If Saudi Arabia and other places in the Middle East have sovereign wealth funds and wish to invest here, fine. I'm okay with that too. But I believe private investment dwarfs government investment. Yeah. I believe private investment is smarter than government investment. And I believe private investment always takes better risks. Entrepreneurs, even when they fail, will learn from it, pick themselves up, and go ahead. When a government bureaucrat fails, nothing changes.
Well, they throw
failing.
more money at the problem is what they end up doing. Plus, when you got like $30+ trillion in debt, the fund you should be worried about is paying off your debt. not probably building a sovereign
And
wealth
success by a politician is defined very differently than a founder of a company.
Although I must confess, I thought Nancy Pelosi's investment track record was fabulous.
She's very lucky.
She is one of the great investors of all time.
Indeed, Larry.
No kidding.
How could that be? Well, we'll discuss that some other time.
Very
Coming up,
impressive. Very impressive.
Kamala Harris finally addressing that disastrous interview on The View last year.
I didn't fully appreciate how much people wanted to know there was a difference between me and President Biden.
Products, all backed by our guarantee at customink.com.
I grieved in a way that I have not since my mother died. It was not at all about losing a race. I knew what it was going to mean for the country. There are many factors, I think, that played into the outcome of that election. But I think probably one of the biggest in my mind is we just didn't have enough time. We didn't have enough time.
We didn't lose. We just ran out of time. Kamala Harris, chock full of cliches and excuses on her media tour, pushing her brand new book. Guess what it's called? 107 Days. Thanks for being exact. Maybe she should change the name of that book to $1.5 billion, because that's how much money her campaign burned through in 15 weeks. How about 14 months? Because that's how much time the Democrats have to sharpen their message before next year's midterm elections. That's important too. It doesn't look like democracy on the ballot is going to cut it here. Harris actually has gotten less popular since last year's election, falling from a -5 net favorability rating in October of 2024 to -13 this month. I can't imagine for the people who didn't look at her favorably that her book tour is going to change their opinion. If anything, I think people might pile on a little bit to this. But she did spend a lot of money in that period of time for losing. I don't think anybody else has done quite as well at that.
Look, I don't know whether more time or less time. I don't know anything about that. Here's what I know. She called Trump a communist dictator in real time 2 days ago. That is just awful. I don't even know if she knows what a communist dictator is. That is just awful. It tells me that Democrats, the leadership of Democrats, have learned nothing. Okay, it's just like this, radicalization of the left. Everyone's a fascist. Okay, calling Charlie Kirk a fascist. Here's a guy who believed in freedom, free markets, civil discussions. Trump deregulating the economy, for example, cutting taxes, for example, is exactly the reverse of communism, where they try to take over every single thing. She actually just called him a communist dictator. I just find that remarkable and stupid, and it's just a big turnoff, and it shows me that the left is still the tail wagging the Democratic dog.
Kevin O'Leary was on yesterday, and he was talking about how if she had any hopes or political aspirations after her loss, that she wouldn't be going around talking the way she's talking, that her donors, Brian, they're just over her.
I guess so.
That favorability rating is plummeting. So there's part of me that says she probably knew that. And that's why she's coming out in full Kamala force.
Part of me wonders if she's coming out in a really intentional way to do this, or is she just bumbling and stumbling like she always
You think
has?
she's that dumb? It's possible.
Well, I remember her campaign, and she thinks the campaign failed because it had too little time. I think it failed because it had too much time.
Wait, just step back a second. Go back and look at it. Go back national elections. Democratic leaders and Republican leaders. Go back to Hubert Humphrey. Go back to Walter Mondale. Go back.
Why are you
to
bringing
Bill
up all the
Clinton.
Minnesotans?
Just whatever. Well, they were on the ticket. Can you remember a serious candidate calling a sitting president a communist dictator?
Yeah.
That's my point.
No.
Go the other way. Can you imagine Papa Bush or George W. Bush calling their opponents communist dictators? That's how awful this story is.
And in the wake of Charlie Kirk and toning down the rhetoric, as so many of the Democrats love to say, she's not doing any of that.
At some point, this whole fascist thing and now communistic, it becomes the tip of the spear. And you know what? words themselves are not violence. Words don't pull triggers. But words become the tip of the tip that gets to people who are a little less stable than others and think about this, and suddenly they do become violent. Yeah. That's the problem here. And that's what Kamala Harris just demonstrated. She demonstrated she has learned absolutely nothing about this whole Charlie Kirk tragedy.
What you're talking about is when you have a group of individuals, and I'm talking about Democrats, I'm not going to say the left or liberals. These are well-known Democrats who paint conservatives and Republicans as if they are a threat to the very beliefs and livelihoods and lives of people who are on the other side of the aisle, who are liberal. When you repeatedly portray conservatives in that light as if they are dangerous and they are coming after everything that is dear to you,
that becomes,
you do incite people.
It's the
and they know that. And with Kamala Harris, I just think part of it is she's gasping for relevancy. And if she had half a nut, she would have gone on The View and tried to audition for a job.
Yeah.
One of those people.
That's exactly where she lost her job last time.
Yeah. Here's the thing.
But she didn't even want to acknowledge that. I mean, the whole thing was just crazy.
Leading Democrats should have gone to Arizona for the funeral and memorial service of Charlie Kirk. And they could have gone and said, look, I don't agree with everything he said or believed in, but I believed in free speech.
Yeah.
And I believed in civil, calm dialogue.
And I don't believe in violence.
And I don't believe in violence.
It's that simple.
It's none of the Fetterman, you give him credit for that. Fetterman did. Yeah. There were some Democrats, a bunch of Democrats did vote for the House resolution.
Right, not all.
I give them a lot of credit for that. Sure. But nobody went out to Arizona, and it's a pity.
Yeah.
It is really just a pity.
Yeah.
More after this.
Well.